Hello and welcome to The Trade. Now, before we get to the charts, time to take a quick look at what traders are watching. Tesla on Tuesday posted a decline in quarterly deliveries for the first time in nearly 4 years and missed Wall Street estimates. A performance some described as ugly, as price cuts failed to stir demand in a highly competitive market. A pair of Federal Reserve policymakers, often considered to have a divergent monetary policy leanings on Tuesday, both said they think it would be reasonable to cut US interest rates 3 times this year. Even as stronger recent economic data has sown investor doubts about the outcome. Intel on Tuesday disclosed deepening operating losses for its foundry business, a blow to the chip maker as it tries to regain a technology lead it lost in recent years to Taiwan semiconductor manufacturing. And oil prices settled higher on Tuesday after a session in which Ukrainian attacks on Russian energy facilities and escalating conflict in the Middle East pushed the Brent benchmark above $89 a barrel for the first time since October. Now let's get to the charts that matter with Peter McGuire, CEO of XM. Peter, great to see you. Thank you so much for joining me.
Good morning, Danielle.
There is so much happening in the currency markets that I think sometimes equity investors, they always just glaze over. But let's start with sterling versus the US dollar, your first chart. And maybe we'll get that one up and you can let us know what you're thinking.
Yeah, sure. Yeah, I'll wait for it to come up. And when you're looking at it, Danielle, I tell you what, you haven't seen a great amount of movement. You've seen a little bit of choppiness, considering where we've been with US dollar. US dollar has had a nice little strength and now sitting at the best part just under 105. That's the US dollar index, and the pound's sitting, the best part of 125.70. So you've seen a bit of a sell-off in the last couple of trading sessions, but over that period of time, really over the last few months, it's been very choppy and range bound. So whilst it's been I suppose if you're looking at option strategies, that's not a bad, your condors, straddles, strangles, all of those sort of things. That's the sort of, I suppose, derivative tool that you would have used to profit from it.
Absolutely. What about the euro versus the US dollar? We'll have a look at that chart there. Again, basically the US dollar has been relatively strong, has it not, Peter?
Absolutely. And when you're looking at US dollar index, that's weighted at around about 62% to the euro, first off. So it's a large component of it, nearly 2/3, Danielle. And the euro's come under pressure. We all understand the position as far as how France, Germany are performing, Italy. So it's fairly bleak over there as far as economic growth. The euro's being crushed a little bit. No thoughts yet from the ECB as far as rate cuts. Maybe you might see something in the next few months, but we'll just have to wait and see. But with energy prices the way they are and creeping up, then I don't think we're going to see a rate cut anytime soon. So that's really going to impact, I think, US dollar and probably force the euro a little bit lower at in the short term.
Absolutely. And what about the euro and Japanese yen? What's happening there?
Well, the yen's come under some fairly solid pressure, as we know, and it's where we're thinking against the dollar, it's running at around about 151. Now, the euro is stronger than the yen, and that's the side of it. It's been a great market to trade if you're looking over the historical, over that probably last 2 to 3 months. That's where all the action's been, euro, yen, and Mrs. Watanabe's been jumping all over it. And I think that will probably continue in the short run unless you see something dramatic coming out of Japan as far as intervention. But you can't rule that out. They did move the other day with rates. So maybe that's on the cards as far as some form of movement for the BOJ.
Yes, I can't help but feel, I'd love to know just your view quickly. The strength in the US dollar, it does seem to be causing, some issues, at least for the yen and the yuan. Do you think that we could see more interventions there, or they're just going to continue to let them weaken?
Well, I think they'll get a point in time that they won't allow them to weaken too much more. So there will be some form of intervention. That's the first part of it. And as far as dollar's concerned, we had it baked in. You'd see a rate cut in March. Now it's pushed out to June, and that's running at around about 60-65% probability. And with I think that's creating again more components of of frustration for central bankers, but for traders, they like it because, it's allowing plenty of volatility, Danielle, and that's what, retail traders are all about. They just want movement, up or down. It doesn't matter as long as you're on the right side.
Absolutely. Well, Peter, thank you so much for joining us today.
Thank you, Danielle.
Okay, that does it for this episode of The Trade. Be sure to join us tomorrow.